Hi everyone, John here, Mr. Forexfire. So this brief video is going to be about risk to reward. What risk to reward means, how you really need to understand it, how you are going to incorporate it into your trading, and how it's going to help you protect your capital, which is your balance on your account. Right, so back in the day, I mean, let me start from right back in the day when I first started trading. I was always told only risk a certain lot size to an amount of money. Over the years, that sort of worked to a certain extent until I got to a certain part of my journey or certain balance area. And then I was finding when I was losing, it was knocking quite a bit away out of my balance and also knocking the wind out of my sails, until I came across smart money. And smart money not only helps you get in on precision entries and liquidity areas and order blocks, and gives you logical areas of importance. When you factor in the risk to reward properly into your trading, you are going to, one, help, as I say, protect your capital, but two, understand the importance of protecting the capital. So when you do sort of come to hitting the SL, you know you are only risking whatever you have in your trading plan. Maybe it's 1%, 0.5%, or even if you work as low as 0.25%, and you know that it doesn't matter how many pips that you've stopped out, whether it's 10, whether it's 20, whether it's 30, whether it's 40, you will always know whatever the determining factor is on that is only ever going to equate to maybe 0.5% of your initial capital. Because you may say, I'm only going to sort of risk say 0.5 of a lot size. That is going to quickly eat into your capital when you are seeing losses. I've had a few people obviously reach out to me that are using certain lot sizes, and when they start seeing their balance going down, down and down, once it starts chopping away at the tree's getting smaller, so your capital starts falling down, and eventually you get to the tolerance level. And when you get to that tolerance level, what happens is the tree just basically comes down and it comes crashing down, and it's your balance gone. That's the best analogy I can put to it. But I'm going to show you today how you can factor in risk to reward to your trading, no matter how big your stop loss. Okay, so we're going to share the screen, and if you just bear with me. All right, so let's have a look. I'm in the middle of recording some other videos at this time. Let's just have a look at where we're at the moment. So I'm just going to go on a GBP CAD at the minute. Okay, so what I'll also need is, you need to bookmark these, is MyFxBook calculator. Okay, so we're just going to keep these two together, right? So let's see, let's just focus in on our attention to this area. Okay, so as you can see, we talk a lot about the last down before the up and the last up before the down, which are logical areas. They are bankers candles. And let's just say we are going to work upon the preference of this candle here, although we will factor in the wick of the previous up as well. Okay, so as prices come down and it's sort of consolidated, it's come back up to meet the criteria of this area here, and it's entered. Okay, now the total amount of pips, if your entry is here and this is here, that's around about 40 pips. Okay, so we've got a 40 pip stop loss. Let's just say we got in on a short on the entry of that candle there, okay, the body, but we wanted to cover our preferences of where the wick is, okay. The TP area is generally where the initial push lays, okay. So that's the liquidity area here, okay. Again, you can go for other intermediary fractal price areas to take partials and things like that, but this is about, at the moment, the risk to reward. So we have here at the moment 40 pip stop loss. Now what we do, we go to Forex calculator on MyFxBook.com. okay, let's just take a look. So you go to home, calculators, position size calculator. So that again, that's home, Forex calculators, and position size calculator, right? Now we're going to go back to TradingView. We are going to find this is the Great British Pound, Canadian dollar. Look for the GBP card. Your currency, whatever you're trading in, you need to put your currency as this, okay? Put your account size. I'm just going to make one up. I'm going to say I've got a £5,000 account at the time before taking this trade. And for this instance, I'll only work in parameters of 0.25% up to 1%. Okay, very rare I'll go for a straight 1%. So let's say I'm going for very conservative 0.2% risk. Okay, there's nothing wrong with risking the small amounts on your account. You are protecting your capital. Okay, now this is the important part: your stop loss and pips. Okay, this is to correlate with again the risk ratio. So if your stop loss, again, doesn't matter how big that stop loss is, 10, 20, 30, 40, in this instance, it is going to be 40. Let's take a look. This is on a 1 minute chart, sorry. So this is going to be, it says 42. That is the movement. You always take away the last number. So in this instance, it'll be 4 pips. So I'm just going to put 4 pips, okay? Just keep this as trade size lots of 1. Calculate. That's telling me to risk 0.25, a quarter of a percent out of my 5,000. I would need to risk 0.4 lot size. Now, again, maybe you're looking at this now and you just having a light bulb moment and you're realizing, seeing that lot size based upon that particular, I mean, obviously that's a big stop loss. If you've been risking 0.5 or more based upon a smaller stop loss, you know you're risking a hell of a lot more than a quarter of a percent. So I'm going to run through another one, okay? So let's go on the hourly chart, because a lot of people like to trade the hourly charts. Let's just change the pair up as well. Euro USD, have I got any markings on this? Yes. Entity card, any markings on this? No. Right, fantastic. Yes, I have. Right, USD GPY. Let's just get this marked down. Right. So again, we're going to factor in this time. We've got the last up before the down. Okay. Again, your TP area would be there. Short position, your short is hit entry, fantastic. You're going just above the last up candle. So I'll make this 100 for a reason. I'll explain this. So that's 100. That's the movement, and the TP is down here. Okay, right. So let's define this. Let's go to the MyFxBook. We are looking for USD JPY. Obviously, let's just scroll through it. Let's say we're starting with a conservative amount. We're 300 $300 account. Okay, we want to risk because we are very minimal on account size on this. We'll go for a 0.10, so 0.10% of my capital. Okay, the pips on this, it says 100. Remember, you take away the last number, so this is a 10 pip stop loss. Okay, let's factor that in. 10 pips. Keep the trade size lots as 1. Calculate. So this is telling you, again, this just shows you the 0.10% of 300 is obviously 0.3. This correlates with this here, 0.3. That's the money in USD, and that's what you would risk. Okay, so you are going to risk a 0.3 lot size on here. Okay, again, there is things you can do on this standpoint. You can see something like I've got a 300 sort of account. I'm risking a 0.10 lot size. Let's have a look. 0.3. So the lot size you're risking is a 0.3. Okay. Risk is one lot size 1. Sorry. The risk is 0.10. Okay. So your lots is what it goes in accumulative of 1 lot size. The risk is 0.10 ratio. You can factor that into this here. Okay. And we can click OK. Now, when you look at this, this is telling you, okay, we've got a risk of 0.3. Okay. So if you lose, 0.3 is down to 299.7. Your 0.3 will take you back to the 300. Okay. If you win this trade on a £300 or $300 account, you are going to get a growth up to just under a £2 mark. Okay. Again, if we said this was a 1,500 account, we wanted to risk a 0.25. That's generally a conservative amount to risk. Always keep this. This is 10, so that doesn't change from here. Trade lot size 1. Hit calculate. You can see from here the sizing is a 0.04. Click this on here. So again, we've got 1,500, 1,500 lot size 0.25. And then you can see on here, if you lose on this from a 1,500, it takes your account to 1,496.25. If you have this as a winning trade, this would take your account from 1,500 to 1,524.79. Now, can you see the importance of factoring in the risk to reward and how it massively protects your initial capital? Because if you were to lose 1 or 2 trades based upon the factor on that, it's only a few quid at a time, if that. Whereas you hit one which goes to where your TP is, you're getting quite a substantial return. Okay, just going to stop the share. I hope you found this video a little bit more insightful, because I have been getting a lot of people reaching out to me at the moment about risk to reward. I'm just going to quickly share the screen one more time just to tell you what that website is. Just move this down. The website is myfxbook.com. Go to home, go to Forex calculators, position size calculator. Again, leave the trade lot size as 1. You need to put your risk to reward ratio. I would generally, when first starting out, I would generally maybe just risk a 0.25 or a 0.3. I wouldn't go to a full percent until you build your confidence. Okay. From there, always put in what your account size is at the time. It is imperative that you use this and trade 1 trade at a time as you are doing these. Do not enter multiple trades, because then you are not getting a true price on the risk to reward ratio, okay? And each trade, the risk to reward will always be different on the outcome of the stop loss to the sizing of the lot size used, if that makes sense. Because as your account grows or diminishes, every time you put maybe say 10, 20 or 30, whatever stop loss you're using, your lot size is always going to change on every trade. Okay. So I hope that makes sense. Please drop your thumbs up, your emojis and things like that if you're understanding this. If you need a little bit more help on this side of stuff, again, just reach out to me or one of the mods and we'll delve a little bit deeper on the risk to reward. It's one of the most important aspects that you get to understand with regards to trading. Okay, guys, again, thank you very much. That's the video on risk to reward.